Hello everybody, and thank you for joining me today on Prescient On Point Live. Today, Seeiso, our head of equities, joined me for the conversation. Seeiso, thanks for doing this with me.
Yeah, thanks, Murray. It's good to be here.
Yeah, good to have you. Seeiso, before we start, please tell everybody a little bit about yourself.
Oh, okay. Well, I've been a Prescient now for, I think, going on 12 years. I've been working within the equities asset class the entire time, and more recently looking after our promising core equity capabilities.
Great, thank you. 12 years, goes quickly, yeah?
Yeah, it goes super quickly, yeah.
The idea of these conversations is really to dig into our asset classes. So as head of equities and obviously portfolio manager, you've got a team of that works with you, analysts. Ashley is the trader, Nick, Dimpor, and Ramelin, portfolio managers working on our suite of equity funds.
Correct.
Very interesting. I think we've often spoken in the market about the way we approach investments on a systematic basis. Maybe just cover that from an equities standpoint.
Yeah, so it basically just means that everything that we do is rules and evidence-based. So we shy away from the notion of fundamental bottom-up stock picking. Not to say that there is or can't be any short-term value in that. We just think in the long term it's not a consistent way of generating outperformance. So we rely more on proven drivers of return, and ultimately we're still using the same principles that a fundamental bottom-up stock picker would use. So we consider valuations, we still consider metrics around sentiment, forward-looking metrics. We look at things like financial conditions, etc., etc. So it's just that we're doing it in a much more systematic and much more proven rules and evidence-based way.
Okay, great. I think we'll come back to that because it's an important part, and we can actually demonstrate for those of you who have dialed in and listening to us exactly how that operates. So just your suite of funds in the range. We'll start off with the Prescient Equity Fund. I mean, this is a really unique proposition for market. I think if we talk about the approach to how clients can use this fund, I think, you've got various options, but maybe talk to the equity fund first.
Yeah. So the Prescient Equity Fund is actually really our best view fund. It's our turnkey solution for clients just looking for the best of what we have to offer. So essentially, efficient equity market exposure in a dynamic way, so expressing our best view, and with our multiple low risk enhancements to give them that additional outperformance over and above, the category average.
Okay, I think that's a great point. I think the equity market returns have been quite dispersed if you look at the general equity sector in South Africa, and so what you're trying to do there is deliver a better than average Seeiso equity category return, which is unique.
100%. So we all know that obviously with dispersion comes a lot of opportunity, but we also know that for the most part, the traditional way of going about things tends to be on the wrong side of that opportunity, especially when outcomes are so dispersed. So what we're doing is a bit more risk focused, and instead of trying to swing for the fences and literally try to be top of the pile over a specific short-term period, what we're doing is saying, okay, we're going to go slow and steady about this, just marginally, first and foremost, get in and around better than average, and then marginally outperform that.
And so the truism is consistently beating the average over time compounds to being best in class.
Correct, exactly. It's I always think back to that Roger Federer analogy, where the number of points that he actually won was just shy or just over 50% of all the points that he played. But because he was doing it so consistently, he's actually one of the best that we've seen in the sport. So similar to here, instead of, you don't necessarily have to win at everything all the time. That's almost impossible. But what you can do is just tilt the odds in your favor. Stack the numbers in your direction, and ultimately you'll drift right to the top with given time and the power of compounding, the magical power of compounding.
I think in this we'll put the link to our website where people can go and have a look at the fact sheet for this fund. We don't have to talk about it, but I'll just highlight the fact that we've got a top 40 equity fund. We've got the core capped. We've got a property fund. And then we've also got a global suite, core global emerging markets, and core global equity fund.
Correct.
So
correct.
again, doing the same
Yes.
principles, applying systematic process in the global space,
Yes.
feeder fund range, as well as UCITS offshore for clients to access.
Correct, and the thinking around those various funds, as you said, core top 40, that is very much cognizant to the top 40 benchmark. The core capped equity fund, that is very much cognizant to the capped Aussie benchmark, the property benchmark, offshore, etc. And the idea there is to basically enable portfolio construction by using these funds as building blocks into an overall equity allocation. So what we found is that including a market cognizant fund that also has a return uplift into a traditional, highly active bottom-up stock picking process can efficiently improve your risk and return characteristics and also manage your cost space. So this enables portfolio construction for big allocators within their equity allocations.
Seeiso, make a very interesting point there around cost. Yeah. And I think at Prescient we've certainly been very focused on delivering portfolios at an appropriate price. And so our equity funds, for those that haven't seen them, often run at around 40 basis points. And
Correct.
So from a cost inclusion, we're really helping clients manage total investment charge at a portfolio level.
Correct. Yeah, the cost is basically one of the things that can really enable good outcomes for the end client, right? So by minimizing that, you effectively put yourself in a better position to ultimately deliver on your outcomes. So that's why we focus on that and try and minimize those as much as possible.
Great. Thanks. That's a good overview. Now, obviously, if we just turn to equity markets themselves, we've seen a lot of activity this year for obvious reasons around what's been going on in the Middle East. If we go back to last year, we saw certainly lots of favor moving to emerging markets and obviously the domestic equity market, which is very exciting. Fortunately, things have recovered, but we saw a lot of volatility over the last while. Trying to navigate that's quite difficult. So when we started, you mentioned our systematic approach. And maybe let's turn to our investment portal just to have a look at the valuation metrics that we're observing at the moment.
Well, let's do that. We basically consider exactly the same types of metrics as a traditional manager would do. We just do it in a systematic fashion. We basically have these 4 main pillars, drivers of returns, which are incorporated into our view, and you can see at any point in time how we have been positioned. So this is our current positioning. You can see we are relatively neutral, slightly positive on SA equities, so we can do the same for any asset class, and essentially what is driving that view. So valuations, economics, financial conditions, sentiment, how they're weighted, and our current score or view on that. So as at the moment, you can see we are moderately negative on valuations, but we are moderately positive on the economic picture and strongly positive on the sentiment with a moderate negative view on financial conditions. The important thing, the powerful thing about this is you can also go back in time and see how we were positioned stepping through time. So you can see we were significantly more negative on the overall SA equities picture, but we're getting more and more bullish as the market develops. And then importantly, within each of those pillars, we have sub-factors that we use, and this is our bread and butter essentially as investment managers. So things like price to sales, dividend yields, forward-looking metrics. We incorporate that to form our valuations view, and this is of course very dynamic and updated as the market evolves.
Seeiso, thanks for that. Very insightful. So I think what the reading or my summary of this is that as we've seen and heard from asset allocators, that there is a big focus back on South African equities, which is beneficial. Obviously, we won't be absolutely appreciative of the magnitude of that allocation, but along with the emerging market theme, which has turned a lot more positive over the last 6 to 8 months, South Africa has been caught up in that, and from a valuation perspective, very nice opportunity. And the obvious point that we want to make is that our equity funds are well positioned to assist clients to get that exposure to the South African equity market.
Exactly. Very well put.
Great. Seeiso, thanks. This is meant to be a short live engagement, so thank you for the time. Thank you for sharing. Obviously, folks, the idea is that we promote our funds and just give people insight in terms of where they can find them, what they're about, and relevant features. Obviously, those are all available on our MDDs.
Yes.
But before I say goodbye, often like a good host,
Yeah.
I must ask you about what you've been reading.
Right.
What's on your reading list at the moment?
Yeah, so I mean, investment focus. I'm actually doing a reread of an old book called Stock Market Wizards by Jack D. Schwager. I find it quite interesting to get different points of views around how, you know, titans of the industry, various titans of the industries go about thinking around, wrapping their head around the stock market as it is right now. So yeah, I'm reading that right now, rereading it, and I'm quite enjoying it.
Good.
Yeah.
So, good recommendation for those that haven't.
If you haven't read it, yes,
Okay,
definitely
excellent.
pick it up. Yeah.
Great, Seeiso. Thanks very much. It was good doing this with you today. Thank you.
Thank you. Thanks, Murray.